How's it going, everyone? It's Sam. Today I want to talk to you about my exact portfolio right now in this bear market. And I'm going to talk about the amount of cash I have sitting on the sidelines. I'm going to be talking about how much crypto I have and how much in stocks I have and the breakdown. Now, I have been investing pretty heavily over the last couple months, deploying a lot of cash, and I want to walk you through that. So, if you don't mind hitting the like button and subscribe button, I appreciate that. If you want to get these updates a little bit more regularly or a little bit quicker, I'm releasing this to the Patreon early, so there is a link to Patreon underneath the video. You can sign up there and see exactly when I buy and sell different assets, and there are also links to a bunch of different brokers down there and exchanges. I would highly suggest trying some of them out, and you can get some free money in the meantime while you're doing that. So let's take a look. First of all, I'm going to talk about stocks, and then I'll go into crypto and then talk about cash for a moment too, but I'm going to try to keep this nice and short. So I broke it down and show exactly what percentage of my portfolio I have in it. I don't have the exact dollar amounts, just for the fact that with crypto, you have to be a little bit more careful showing how much you have of something. But starting off, I have 0.5% of my portfolio in Disney. I still think that Disney is a great brand. It's a little bit difficult with the Rona. They went through some difficult times with their parks, but I think they will continue to grow out their streaming and hopefully continue to build on their great assets and IP that they have. Then Matterport has great technology. They've fallen down so much in price. I did take profits when they were towards the top, around $30. Now they're at $4. So I think that they do have good technology. I wouldn't be surprised if they got bought out by Google or by Facebook or something like that, some tech company that has a lot of cash, because they are really cheap right now. And they do have a lot of clients. They just can't seem to grow their top line very much. Then Tattooed Chef, another company that I had a lot more in when they were more expensive. They obviously, along with Matterport, are a higher risk stock. They have been growing 20 to 30% a year. I haven't been following them as much recently because they are a small portion of my portfolio. I haven't been adding to them either, but I still do think that in that product category of vegetarian frozen foods, I think that they are quite a good company for the valuation compared to a lot of the other ones, and have a lot of growth ahead of them. Then I do have some crypto related stocks in this portfolio as well, and I just included them here because they are stocks like GBTC, ETH, MicroStrategy, a couple different exchanges like Coinbase. They're only 2.8% of my portfolio. Those have been beaten down like crazy recently. And then we have a Dividend Portfolio. I have some money that I have set aside, $100 a week, just to go into dividend stocks. And I started doing this about 2 years ago, and it's about 3.5% of my portfolio. And then I do have Palantir as well. Palantir is one that I've added slightly to on some of the dips. I do think they're going to be really high profit and be very cash flow positive years down the line. They have really sticky clients, and the fact is they are one of the only companies that does what they do and do it as well as they do and have these massive clients. They've started to build out their commercial side as well, and like I said, they're very high profit margin. And then I do have some index funds. I've been adding a little bit to these over time, but I haven't added very much. I think I'll continue to just add a small portion to my index funds as time goes on. Then I do have Facebook as well. Facebook definitely beaten down. At one point, this was one of my largest companies, but I hadn't really allocated too much towards stocks for a while. This year, I really started putting a lot into the stock market, especially over the last few months. And Facebook definitely is pretty cheap when you compare it to any time in the past. And a lot of that's just because people are worried about the growth vectors in front of them. They've already gotten such a large majority of the world to use their products and apps, and now they're focusing on the metaverse, and a lot of people wonder if that can actually be profitable and how long that will take. And they know that competition is coming from Apple, but the fact is they are just a cash flow machine at this point. I think they're right around a 12 PE ratio when you take out their cash, so it is a pretty cheap stock relative to every time that we've looked at it in the past. Then Amazon is a larger position. It's third with a 14% weighting in my portfolios. I've been adding aggressively to this, and then the two other stocks on this list as well. Amazon just has so many different growth vectors, and a lot of people don't even think about their cloud business, and that's really the highest profit margin part of their business, along with advertising, I suppose. But it's got a really high barrier of entry. They're making a lot on the bottom line from it. And while Amazon is really hurt short term with the increased oil prices, I think that's really what's driving them down now. The fact is that will subside eventually, and they will be able to get past this, and they are the dominant player in retail shipping, and then also the cloud business and advertising. They do a great job of that as well. So they are growing very quickly as well. Who knows what they do this year, but the fact is they are growing fast overall. Then Google, just a cash flow machine, pretty cheap compared to where it's been in the past, and that's pretty much as far as it goes, right? They're going to do well in a good economy. They're not going to do as well if the economy takes a dip because of advertising. But the fact is, products still need to be sold, right? People still need to sell their products, so they have to advertise, and that's where they're going to do it, is through Google, YouTube, that kind of thing. And then we have Tesla. Tesla, I think, will just dominate the electric vehicle market and the car market over the coming years. I got a Tesla recently in the last month or so, and I absolutely love it. It's fantastic. I said to my fiance too, I don't know why anyone would buy any other car besides a Tesla in this price range. And of course, there are some scenarios where someone might want something besides a Tesla, but the fact is Tesla is just the best car out there. I think the best technology, and they're growing in other ways as well. They're growing other sides of their business, solar energy. We also have FSD and their robot business as well. So I think they will grow in other ways as well, but they're growing so quickly just in the amount of deliveries, and this quarter will be tough for them. That's why their price is down now to about $700 a share at the time of this recording. They will have a tough time because Shanghai was shut down for a good majority of the quarter, but I think they will rebound pretty well after this quarter. And then moving on from there, my stock portfolio is significantly bigger than my crypto portfolio at this point. My crypto portfolio was much larger at the beginning of the year. Then I put a lot of money into stocks, and I also had my crypto portfolio fall down a lot as well, just because crypto is down so much. But starting at the bottom of the list, and then we'll talk about cash and kind of my position on the market overall. We have Phantom. It's a very quick layer 1 blockchain. We have Sol, which is an NFT layer 1 essentially, or a smart contract platform again, and those are definitely higher risk than we have ADA. I trimmed down my ADA position months ago, maybe it was like 6 months ago or 4 months ago, and I got a lot of flack for it at the time. People said that I was an idiot and stuff, and I cut down by 70 or 80%. And I'm really glad I did that because it fell significantly after that. I put it into Bitcoin and into cash, I believe it was. And then I have Matic. Matic is a layer 1 and layer 2. They have a lot of money, and they've been doing a great job of trying to expand what they're going to do in the future, and they are just so much cheaper than using Ethereum. I think a lot of people will start using Matic, and it's been integrated a lot already. And then we have Solana, definitely another high growth name that I want to continue to add to. I got some flack recently for this one as well because I did sell part of my position. Sol was up like 37% in a week, while Bitcoin was down 7%, something like that. And the fact is that's just a crazy change in price, especially in a bear market. So I sold half my position and put it into Bitcoin, and since then Solana spiked up and then came back down, so I'm about at break even on that now. I like Sol for the long term, but in a bear market it is pretty risky as opposed to Bitcoin. And then we have Ethereum, still 13.4% of my portfolio. I really haven't been adding to it though. I just had a bigger position during the bull market, and I will add to these as we get deeper into the bear market, but I'm not looking to add right now because I think we could fall further. At least these cryptos could bleed more towards Bitcoin, and I could always be wrong, which is why I hold some of them and I'm not all Bitcoin, but I think that is something that we have to be careful of. And then Bitcoin, I have been adding to just dollar cost averaging. It's 76% of my crypto portfolio now, and it will probably get up higher. I mean, especially as dominance goes up, because it is relatively low right now compared to where we were just a week ago. I think we're down at 43 or 44%, and it was at 48 or 49%. And then also I'm just adding to Bitcoin, so this will probably go up to 80, 85, who knows, maybe 90% as time goes on. And then, like I said, this is a much smaller portfolio now than my stock portfolio, but I'm still adding to both. I'm adding a little bit more aggressively to the stock portfolio, but I think the crypto portfolio will probably return better over time, but there's also higher risk with it. And then cash, I have been spending some cash, just like I said, on a car recently, and then some other things I had to do. We have a wedding coming up. Actually, you might be watching this pretty close to the wedding, actually, within a week, but I had to pay for some stuff there. So the fact is, my cash has been drawing down a bit, but I still have cash flow coming in. I'm still positive cash flow as just, a household. So we do have cash coming in, but this is what we have sitting on the sidelines that could go into the market. So 26.7% of all these together we have sitting on the sideline. That's not necessarily because I feel really strongly about the market one way or the other. I'm just trying to dollar cost average and make sure that I can do that over a number of months and months down the road. I want to be able to continue to dollar cost average, and I don't think it's a bad time to have cash on the sidelines, but luckily I have been able to build this up without really selling any assets. It's not like I foresaw the market collapsing and then collapsing and collapsing and collapsing. I just said at the beginning of the year, hey, I'm just going to consistently dollar cost average because I think we can fall down throughout the year, but I never know when it's going to turn up because you don't know what's going to happen with inflation, with the war and that kind of thing. So I'm just consistently buying into the market, making sure I don't get greedy, making sure I don't get too fearful just by having that plan. Now, of course, I could always be wrong. We could have this happen for years and I could run out of cash, or this could end in a week and the war in Ukraine could be over. We could have lower oil prices, we could have inflation come down, and then I could have deployed a lot more cash than I have. But that's just a scenario that I'm willing to risk. I'm going to keep some money on the sideline so I can keep on dollar cost averaging because there's no way of knowing what's going to happen in the future. Now, let me know your thoughts on this portfolio underneath the video. Let me know if you think I'm going too heavy or too light on something. I'm sure some people will say I'm too heavy on Tesla. Some people will say I'm too light on Tesla or too heavy on Bitcoin. Let me know your thoughts. Thank you so much for watching, and I'll see you in the next one. Bye.